I have seen cases, for example, that US citizens live in a foreign country, they have companies there, they receive dividends, they receive salary, and the combination of dividends, salary, and consulting income it goes beyond the $110,000, and they have to pay taxes. That is the problem when your income is higher than $110,000 and you are an employee, you pay taxes minus the taxes that you have paid in your country. So you pay taxes in the foreign country, you have to take that as a credit. Now, and there is a point of caution there. Whenever you take taxes paid in the foreign country as a credit, and you have the foreign earned income exclusion, you only take the share of taxes that do not correspond to the $110,000 foreign earned income exclusion. A typical example, you made $150,000 in the foreign country. Just an example, $150,000. So you have and you pay $20,000 in taxes, just a number. So out of the $110,000 that you received, $150,000 that you received, $110,000 is a foreign earned income exclusion. But when you are going to report the taxes from the foreign country, you cannot claim that you have paid taxes for $50,000, because part of those $50,000 corresponds to the $110,000 foreign earned income exclusions. And this, I've seen this when returns come from different CPAs. I've seen this over reporting of taxes. Whenever I have $150,000 I made in the country that I'm living, and I paid $50,000 in taxes, I cannot say that I have paid $50,000 of taxes, because the IRS is giving me a break of $110,000 in my income. So I have to do a pro rata. What is the corresponding of the 50,000 to the 110, and only claim the portion that is not corresponding to the 110. So I cannot claim $50,000 because I already have a break from the IRS. I can probably claim only out of the 15,000, because I have a portion of $110,000 that is non-taxable. So I cannot claim a foreign tax credit for all of the $50,000 that I paid in the foreign country, because it's not true. The IRS is giving me, in the US, the IRS is giving me a break for $110,000. So I cannot claim $50,000 that I paid in taxes in the foreign country as a foreign income credit. I have to claim only the portion, the pro rata of the 50,000 related to the 110 of the foreign earned income exclusion. This is something that is not clear. I've seen many questions about this, and we always play safe. And I know sometimes this creates a problem for expats reporting, because they say, I pay $50,000 of taxes in the foreign country, why I cannot claim the $50,000 as a foreign income, as a foreign tax credit? And the answer is very simple. You cannot claim $50,000 paid in the foreign country because the IRS is giving you a break over $110,000 of foreign earned income exclusion. So as you exclude the income for $110,000, you have to exclude also the portion of the taxes that you paid in the foreign country. It's a complicated topic.
Yes.
But believe me, I've seen this in return. So keep in mind that even though you pay taxes in the foreign country, unless you are self-employed, they are 100% deductible. If you are not self-employed and you work for a company, the taxes that you pay in the foreign country are not fully deductible because you have a foreign earned income exclusion. It's complicated, but If anyone with questions, it's free to email us, and we will be more than happy to provide this guidance, because it's good that expats know this, that it's not nice to have these surprises at the end of the year. I've seen clients, they have these surprises at the end of the year because in the previous reports, other accountants, they have claimed the full taxation. There is no, they don't have any problem, any immediate problem. Problem is that if the IRS selects your return for an audit, that's when the problems start. Although there is a statute of limitation of 3 years that the IRS can only audit you 3 years back without counting the year that we are at. So without counting the year we are at, the IRS can audit you 3 years back. It is if your return is selected for an audit, it's going to be necessary for you to prove of your claim. So it's better to play safe instead of creating all these gimmicks that at the end it's not gonna be productive. It's not gonna be worthy to go that route.